Good evening, future Maryland homebuyers. Thank you so much for being here. My name is Kelly Beard, content specialist for Maryland Realtors, and I want to welcome you all to your Home Buying Keys webinar. Assembled tonight, we have experts in the industry. With us is our very own Director of Advocacy and Public Policy, Lisa May, Frank Bamonde from Maryland Housing and Community Development, James Hall from Freddie Mac, our local realtors, Angel Sauls with Keller Williams Preferred Properties, and our lender, Kyle Davidson with Meridian Bank. Tonight, you will get an abundance of information to help you navigate and succeed in your home buying journey. This webinar will be recorded and sent out to all registrants after the conclusion of the webinar. We do encourage your questions and we look forward to answering them. Please post all your questions in the Q&A box below at the bottom of your Zoom screen. And with that, I will turn it over to our Director of Advocacy and Public Policy, Lisa May. Lisa, take it away.
Kelly, thank you so much. And thank you everyone for being here this evening. This year is rapidly coming to a close. I can't believe it. But, many of you may be hoping to become homeowners before the end of the year. Maybe you're just looking to get a jump start on becoming a homeowner in 2024. Whatever the situation, we're glad that you're here tonight because we have assembled these experts to take some of the fear, some of the questions, some of the intimidation out of becoming a homeowner for the first time. It can be a whole lot. And that's why we're here to hopefully break it down for you and answer any specific questions that you have. So like Kelly mentioned, as we go along, we will pause for questions. Go ahead and put yours in the Q&A and we will do our best to answer them here live this evening. So with that, I'm going to hand it over to our first expert this evening. It's Angel Sauls, who is with Uplift Property Suites of Keller Williams Preferred Properties. She is based in Upper Marlboro, and she has a wealth of information on serving first-time home buyers because she holds both the Housing Opportunity Certification and At Home with Diversity. So she has experience representing a lot of different clients in a lot of different situations, and we are just so thrilled to have her here this evening. So Angel, why don't you begin and tell our attendees tonight what it means to be a home buyer in today's market.
Thank you so much for that glowing introduction. I really appreciate it. I am going to share my screen and give me 1 second to do that, and then we will get started with my presentation. Of course, it started at the end, so 1 more second. And we'll go here. Okay, hopefully everybody can see that. So I would like to start off just, I guess, a reintroduction of myself. I am Angel S. I consider myself your guardian realtor, so we'll talk about that a little later on in the presentation. This is just a list of some of the things that I'm participating in within the real estate community. I do love to serve. And I've been in business for 19 years now, so hopefully that means I've learned a little something. I'll pause for applause right here, and so everyone can say how young I look to have been in business this long. Thank you so much. Okay, so what 19 years really doesn't mean anything because the market changes all the time, right? So what I really would like to emphasize is that I am a student of the real estate market. I'm always reading and researching and paying attention to what's happening so that I can serve clients. And let us start with what it means to be a realtor and what it means to you as a home buyer to be a realtor and what our job is. So this is just a little snapshot of the home buying process. And on the left side, I've just listed some of the hats or roles that we take on as a real estate agent, helping a home buyer in any real estate market that there is. So I start with selecting your real estate agent because we're going to be the hand holder throughout the home buying process. So if you start with us, we can introduce you to a lender that we know will service you well, and we can introduce you to a title company and an inspector, and all the vendors that you'll need throughout your home buying process. Of course, you are at liberty to start with your financing and be all the way pre-qualified when you come to us. That's great as well. We just want to make sure we have an open line of communication with the lender that you select. So if that is Kyle, who will go next, that's great. Kyle and I will build a relationship so that we can help guide you through getting keys at the end of the day. So once you have your financing approval, we'll have a initial consultation. So this is where we really talk about what you want out of a home and how that fits into what today's market looks like. I've never met a market I couldn't sell a house in, but it does change the strategy that we use to get you a home in a particular market. So right now, I know everybody's talking about interest rates. Well, what does getting the house you want in an interest rate that is, 7 and 8% look like today, as opposed to what it looked like 2 years ago when interest rates were at 3%, right? So we're going to have a long talk about setting your expectation, getting your needs analysis done, but also setting your expectation on what that's going to look like. And so that's part of being a listener, as you see on the left, and a teacher. I'm going to listen to what your needs are, and I'm going to teach you how we're going to accomplish that in whatever the current market is when you start looking for your home. Then, of course, we're going to do the fun part, which is selecting and viewing properties. We're going to do some online shopping, and then we're going to go out and hit the pavement, is what I like to call it, where we're going to go out and look at homes that suit your needs. What I like to do when we go look at properties is you're going to go in and look at, can you fit your life in this home? Does your lifestyle fit? Does it have what you need? Can you picture yourself there? And I, as a real estate agent, are going to be looking at things that are a little more practical. How old is the home? Are things in good condition? Are there any red flags that we need to be looking out for? All of that. So we'll, as the real estate agent, we'll kind of have your back to make sure we're not making any poor decisions if you fall in love with a particular house. Then, of course, we are a negotiator for you. We're going to look at current market conditions, look at where properties are selling, determine if the asking price is the appropriate price for the condition that it's in, and we're going to come up with some terms. And sometimes there's some back and forth with the seller on, maybe they don't like some of the terms, and then there's a rare occasion where everything is accepted exactly as we wrote it. But that's part of our job as a real estate agent also, is making sure that you're getting the most for your money, not overpaying for homes, of course, and then getting terms that are suitable for you and for the seller. Then you have your accepted contract. And then this is where things get really exciting. So all of these things you see under accept the contract are going to be happening simultaneously. So once you find your home and the contract is accepted and that's considered ratified, the next 30 days are going to be a whirlwind where you're talking to your lender, you're talking to your inspector, you're getting hazard insurance, the appraisal's happening, the title company's asking you for things, your lender's going to ask you for things that you may have already sent, just send it again, whatever the underwriters want, give it to them. And all of that's happening in about a 3-week period. And then we're working on going to closing. So the counselor and protector part of this really starts coming in while we're working on that removing contingencies portion of the home buying process. And that's because, things are going to come up in the inspection, most likely, that we're going to have to try to negotiate. And what's most important to you is where we're going to start. And then the sellers, of course, will want to take some things off the table, and we'll have to decide if it's worth it and all of that. So that's the counselor, and then protecting your interests and your needs at all times. And then, with your lender, they're also a counselor and protector, because they're going to be coming to terms or helping you come to some terms on your loan and interest rates and down payments and all of that while you're in this process. And then, the appraisal can come in low, the appraisal can come in high. All of those things are things we're going to have to discuss during the process as well. And then the title company doesn't represent one party or the other. They're just there to make sure that a legal transaction happens, but they're going to be asking for things that you may not understand. And that's where that counselor and protector comes in as well, where we're explaining these documents to you. And then, of course, your lender is going to tell you how much to wire to the title company for closing. We're going to schedule it for 3 days later. And then we're going to get you some keys. So we're your celebrator. Now, I will tell you that this process, particularly as a first-time home buyer, can be really emotional. It can be up and down, and sometimes there's tears, sometimes there's contracts lost, and starting the process all over again and all of that. And that's why we're going to actually become friends at the end of this process. We're going to keep in touch, and I'm going to learn about your move-in date and send a gift, and we're coming to the housewarming. Your realtor really should end up being your friend, and of course you see there at the bottom, your realtor for life. So that means usually people aren't buying a home and staying there for 30 years, right? A lot of times you're gonna maybe want to rent that house out and buy a new one, or you're going to sell that house and buy a new one, or maybe you're moving away, or you're ready to invest. You should have one realtor and one lender, quite frankly, that knows your portfolio and can walk you through all of these decisions over the length of your wealth building process. And so that's why I say realtor for life on there. Just get your team in place and keep those people along with you for all of your real estate needs. And so I'm gonna step on Kyle's toes a little bit here. I don't know if you plan to talk about this, but I do want to set the expectation that you need some money. You need credit, cash, and income to purchase a home, right? So I like to let purchasers know in our initial consultation that you're going to have to put some money aside. So you want to have money outside of your down payment, which will be due upon closing, for things like your credit report, potentially your appraisal, your home inspection, a termite inspection, a re-inspection if we've been able to negotiate some repairs for the house, and then your earnest money deposit, which is essentially your security deposit. And you hear on TV, there's like open escrow. Well, this is the money you use to open escrow that you put in the title company so that they can hold that money, and it's applied toward your down payment once you go to closing. So I like to set the expectation up front. Hey, you should be saving specifically toward your home buying process, right? I don't know if you need to open a separate account or put it on a prepaid card that you just put in a drawer somewhere, but like put money aside specifically toward this that you don't touch. And that's how you're going to set yourself up for success. And then I do have a little blurb down here about how closing costs, which are different than your down payment, your closing costs can be 5 and 6% of that purchase price. So of course, there are programs that can cover that in way of grants. Sometimes we're able to negotiate seller help. And then the rest of that would be coming out of pocket. So I'll let the lender, Kyle, get more into that if he plans to, but you want to keep that in mind. So when you're getting your pre-qualification, you should be talking to them about what your cash out of pocket is going to look like. So this is why, you want one person like holding your hand throughout all of these processes, because there's so much information there is, and you might not know it all. And it's our job to know as much of it as we can so that we're guiding you properly and having a good team in place to cover all of your bases. There's two reasons I call myself a guardian realtor. One is because my name is Angel, obviously. So the other part of that is that I really do advocate for building a relationship with your team. So I talked about, you want someone who's going to know your portfolio essentially. So this means you may go to closing and everything's great, and then you call and say, oh gosh, my gutters fell off. You know, who do I call for that? Well, you should be able to call your realtor and get a referral for that, right? You're going to get your tax bill in the mail, and you're going to think, oh my God, do I have to pay this? What? You should call your realtor and say, hey, I got this. Do I have to pay this? And, you know, most times it's a part of your escrow, so you won't have to do that. And you're going to get a check in the mail that your escrow overage, you know, sends you back, because they can only hold a certain amount of money in escrow. And you're going to call and say, oh my God, can I cash this check? This feels like free money. And those are all things you should be able to call your realtor about. So it really should be, you know, a really long-term relationship with someone. I am an advocate of using real estate to build wealth. To me, even if you just buy your first house, that's an investment. That is a tool that you can use to finance other things, whether it be education or, you know, weddings or retirement or whatever is the case. Your real estate is a wealth building tool. It is an investment, even if you just buy your primary property. But I've had a lot of clients come and say, hey, you know, I'm scared to death, but I've been thinking about buying more homes. And so you really want someone that's going to have consultations with you throughout your life as a homeowner to talk about what can be done next, you know, and maybe you outgrow a home, or maybe you're ready to downsize for retirement, or maybe you got to relocate. You know, these are all things you want to have someone that you've built a relationship with to talk about and consult with to help make informed decisions. You know, again, we talked about markets changing all the time, and you want to be able to make that call to someone you trust, that you have a relationship with, to ask those questions to. And then just any questions. No question, in my opinion, no question is a dumb question when it comes to you know, your life as a homeowner. You know, the inspection, I'll give an example. The inspection is really an educational process as well. Yes, they're looking for items that are wrong, but they're educating you about your home, and they're essentially giving you a manual to the home you own. There's going to be pictures and arrows and notes and suggestions and maintenance things. And you may not know where your water shut off is, or not remember where your water shut off is, so that your pipes don't freeze, you know, when the temperatures get low, right? We'll call your agent, and your agent should say, okay, well, let's go back and look at the inspection report and see where that was. And here's how you do it. Righty tighty, lefty loosey, whatever's the case. But you want to be able to have someone you're calling for that as well. And then you just, you want someone who's educating you on what the current market is at all times, because if something's coming down the pike, you want to know about it, right? So this is where your agent is sending you, I don't know, a newsletter or email, or, hey, look out for this, or something in the county's changing, or, hey, it might be time to appeal your taxes and things like that. They're just, you know, your realtor is sharing that information with you over time, really until they're not licensed anymore, is my opinion. You should be getting that information from them. And then a referral resource. 100% of my business is past clients and the people that they refer, right? I take great pride in that, because it means I'm doing a good job. So that's one thing. But also, I'm a referral resource for you. Do you need someone who can help you refinance? Do you need someone who can replace your roof? Do you need someone who needs, you know, maybe you've fallen on tough times and you need a program to help you do this or that? You know, I make it my business to know about these available resources, and some I do just send out randomly, but when you have a need, you should be able to call your real estate agent, and they should have a referral for you for whatever that need is. I consider it a true relationship. You know, we get to know one another. Like I said, I feel like we become friends, and in some cases become part of the family. I have clients that I've worked with, the, you know, two sisters, the dad, the uncle, a cousin, you know, aunt, you know, because it's a relationship, and I'm essentially consider myself, even if they don't, a part of the family at this point, because we've worked with, so many from the same family. So, that's my opinion on being a guardian realtor. All real estate agents won't refer to it that way. They have a different name for it, I'm sure. But we, as real estate agents and realtors, really take pride on building relationships with our clients. And that's what I feel like it means to be a guardian realtor. So I would love to, if there are any questions, or if Lisa, you have any prompts that you'd like to ask, I'm ready for that. I hope I wasn't like speed talking, but like 15 minutes does not feel like a long time to be, going over this information.
Now, Angel, you did great. I don't see any questions in the Q&A yet, but Angel's going to stick around. So if you are still typing one out or anything like that, please feel free to keep doing that. But, Angel, a question that a lot of people ask is, there are almost 30,000 realtors in Maryland. And if I don't already know one, how would I go about finding the right realtor for me, other than like a dartboard or, just blindly picking a name out of a hat? How do you go and find that right guardian for you?
So my true and honest opinion is to ask other homeowners that what their experience was and if they would recommend their real estate agent to you. I think that's where you get the most true and honest opinion from someone. Like, well, how did it go for you? And would you, recommend that I give them a call? You'll get the true and honest answer. So my first step would be saying, ask someone who you trust that is a homeowner for their real estate agent's information. If it's a situation where you'd rather just go it alone and it's kind of like, I don't even know if I can really get through this process yet. So I don't want to be telling people that, because I have had clients like, I'm not going to tell anyone until I get keys. That's fair as well. And I would start with, going on home search websites and seeing who's advertised. And I suggest interview, quite frankly. You give them a call, have some questions at your, be armed with questions, for lack of a better term, and give them an interview and sit down and do maybe a video consult with them, and really feel that the energy and see if it's going to be a good fit. And maybe it isn't the first go round, but maybe it is. I also recommend using the MarylandHomeownership.com website. When your housing opportunities certified, you are able to be listed on the homeownership.com website, and that is by Maryland Realtors. And those are people that are trusted and licensed and certified and qualified, and that would be a great resource to start there as well.
Awesome. You even put in that plug for Maryland Homeownership, and I didn't ask you to. So yeah, MarylandHomeownership.com. Wonderful, wonderful resource for buyers. Let's see. One question came in. Actually, it's a pre-approval question. I'm going to hold that one. We are going to answer it live, but I am going to kick that over to our lender here this evening. And I bet that he can tell us about how long a pre-approval is good for. So, Angel, thank you once again. Wonderful, wonderful information. We're now going to turn to Kyle Davidson. He is a mortgage loan originator with Meridian Mortgage in Annapolis and Columbia, and a top performing lender with the Maryland Mortgage Program. So, Kyle, tell us, mortgage lending in today's market, what do we need to know?
Hello, everyone. Thanks for having me. Can you hear me all right? Can you see my screen? Okay. So anyways, yeah, my name is Kyle Davidson. I'm a local lender here in Annapolis with Meridian Bank Mortgage. I've specialized in first-time homebuyer programs, and I really emphasize hand-holding clients through the process. I recently bought my first house about 2 years ago, so I recently have been through this process myself, And I empathize with first-time home buyers in that regard, that even having been in the industry for a while, it was very stressful. And I don't want clients to have to go through that. I want you to be, have full transparency every step of the way. And I also want to be able to utilize every program that's available, get you the best possible interest rates, and take advantage of everything that you possibly can as a first-time home buyer. I'll continue on to my next slide. For the pre-approval process, I'll kind of walk through everything that's going to be included in that process, what we're looking for when we're pre-approving you, so you can kind of get yourself ready, and so you can understand what exactly we're looking at when we're pre-approving you. It really falls into three big buckets. What we're looking at, we look at your credit, which is really just, it's the score that's coming back, the middle score of the three credit bureaus that we pull. It's going to be your debt to income ratio and your down payment. And I'll do a deep dive into each of these. Credit score is probably what I get the most questions about. I do have some tips and tricks here as far as how to improve your credit. And I actually handhold a lot of clients through getting their credit up. I do free, I call it mortgage action plans, for those who need a little bit of help to get their credit score over the requirement for whatever program they're trying to utilize. A lot of the first-time homebuyer programs have a 640 credit score requirement. You can, however, buy a house with as low as a 580 credit score using an FHA loan at 3.5% down. The graph you see on the right, that's how credit is actually calculated. You can see on the top, it's 30% counts owed. So that's the balance that you have on your accounts. It doesn't benefit you to keep a high balance if you have, let's say, a $1,000 credit limit. If you keep $900 on that account, even if you're making the payment on time, it can still negatively impact your credit. You can see I have top bullet point is try to keep it below 20% of the available balance. The lower you can keep that revolving line of credit, like a credit card, the more it's going to improve your credit. I also recommend to keep old accounts open. You can see the 15% length of credit history. If you have an account that's been open for a long time, I actually had this happen to me, where I had an account that I opened when I was very young. I think it was like a JCPenney's rewards card. I opened that. I used that to purchase my first house. And then I hadn't used it for years, and it actually closed on me. And I saw my credit drop about 60 points because of the length of history that I had was now much shorter, because I didn't have a lot of credit history at the time. So it's important that if you do have old accounts, you keep them open, even if you're not utilizing them, and use them once in a while so that they don't drop off in that case. Payment history is obviously the most important part of it. If you're missing any payments, everything else basically goes out the door. Make sure that you're keeping everything on time and making more than the minimum monthly payments if it is a revolving line of credit. Try not to open new accounts. You can see 10% of credit is made up by new credit accounts. When you do have an inquiry on your credit report, it does tend to drop your score anywhere between 3 to 5 points. And when you open a new line of credit, it can actually drop your score even more significantly. It's especially important during the mortgage process, because it is calculated in your debt to income ratio, the minimum payments on credit cards and new car loans, etc. And we also don't want your credit score to drop. And then you also try to minimize the inquiries. We actually offer a soft pull for pre-approval. You do have to do a hard pull, unfortunately, with the mortgage process. You do, however, have the ability to do some shopping around. If you've had your credit pulled with one mortgage lender, it opens up a 45-day shopping window where you can apply with as many mortgage companies as you would like, and it no longer does any more damage to your credit. I did get a question earlier about the length of the pre-approval. That's actually based off of the credit report, how long the credit report's good for. Typically, they're good for 120 days or 4 months. Typically, that makes your pre-approval good for 3 months, because we're going to need about a month to close on the loan itself. So you have about 3 months to shop around, try to find the best house that's going to fit your needs. Once you go under contract, typically it'll be anywhere from 30 to 45 days. If your pre-approval were to expire, We just need to pull a new credit report, get new updated documents, and we can easily reissue a new pre-approval as long as everything is the same. One other tip is if you have derogatory accounts on your credit, such as missed payments, collections, or charge-off accounts, you can try to get those deleted from your credit by settling with those companies. This is a lot of what I put into my mortgage action plans I put together for those that are trying to improve their credit to qualify for a program. A lot of times you can call into a creditor, you can ask them to settle on an account. Let's say you owe $1,000. Typically, they're willing to settle for less than the $1,000. Let's say maybe they'll take $650 for that. So you just saved, $350 just by calling in. On top of that, you can ask them to have the derogatory account deleted from your credit report. That's different than just calling in and making the payment. If you get it deleted from your credit report entirely, it acts like it was never on your credit to begin with. So you can see a large spike in your credit just from getting one account deleted, especially if that's like the only thing that's negative on your credit. I do this a lot, but I recently had a client that came to me as a 560 credit score. We worked to get 3 accounts deleted from her credit, and she actually rescored to a 680 credit score last week, and she has been pre-approved since then. So yeah, there's a lot you can do. Just because your credit is a little bit lower, don't necessarily let that discourage you. Have a lender put together a plan for you so that you can increase your credit or work with someone in credit repair to do the same. Second big bucket that we look at is your debt to income ratio. This is really what qualifies you for the house itself. This is going to dictate how much house you qualify for based off of the mortgage payment. What we're looking at everything on a monthly basis. We're looking at your total debts that you have. We're looking at the credit card minimum monthly payments, auto loans, student loans, personal loans. We actually do take into account layaway and payday loans, so make sure you're trying to stay away from those when you're going through the pre-approval process. If you pay child support or alimony, we do have to count that against you in your debt to income ratio. And if you owe back taxes, like if you're on a payment plan from back taxes, we also do have to take that into account. As far as income, what we take into account, if you're a W-2 employee, salary, or hourly employee, we can obviously take that income. Those are the most common. If you're retired, you have a pension or Social Security, we can take those into account as well. Child support and alimony, a little bit different. We can take them into account as long as they've been consistent and they're going to continue for 3 years into the future. So typically we're looking for, if it's child support, we want the kid to be under the age of 15 so that it'll continue till, at least 3 years. Usually it'll drop off once they're 18 years old or graduate from high school. And alimony is the same. We just need to prove that it's going to continue for 3 years into the future. If you're self-employed or a 1099 employee, we are looking at your tax returns to calculate your self-employed income. Typically, we're looking for a 2-year work history of self-employed borrowers, and we're going to average the last 2 years and the current year to date of that income, because we also have to take into account what you're writing off on your taxes. Also, if you have disability or if you are a veteran, you have VA income, we can also take those into account as well. So how we're calculating what you qualify for in the house is we're taking your total monthly debts, we're adding that to what your projected mortgage payment is going to be. Let's say you're looking at a $2,000 a month mortgage payment. And we're going to divide that by your monthly income. And that is going to give us your debt to income ratio. Typically, we're looking to keep that number either under 50 or 45%. There are some programs that allow to go a little higher. There are some that cap it a little bit less. Once we get that total mortgage payment, that's the max that you're going to be qualified for, my job is I basically will reverse engineer that into what a house looks like in the current day market. So we'll take the interest rates into account. We're going to take the tax bill, homeowners insurance, all of that, on a local scale. We're going to look at what county you're going to be looking in, what price range of houses, et cetera. And we're going to reverse engineer that into what a house looks like. Let's say a $300,000 house. And that's going to be what the max that you're going to be approved for. Now you can buy anything under underneath what you're approved for. But it's also important that, when you do actually find the property, you want to make sure to run that by your lender, so that they can actually figure out what the exact number from that house is going to be. This is just basically our best estimate, but interest rates will change up until you go under contract for the property. So that's going to be fluctuating. The tax bill is just going to be an estimate to start. We can pull the actual tax bill of that exact house and get more of an accurate number as to what the number is going to be. Then, of course, we'll also take into account, if you're getting seller concessions, maybe to buy down the interest rate, or if you're able to negotiate any further off the price. So we'll know exactly all of those, and you'll be able to figure out exactly what you're going to need at closing and exactly what your interest rate is going to be to make sure you're comfortable with that before you place the offer. The last piece of the puzzle is the down payment. The down payment is by far the most flexible. A lot of times people are working on their credit to be able to qualify for a lot of the programs that are out there for first-time home buyers. These are all the buckets that the down payment and closing costs can come from. As Angel had said earlier, closing costs are typically, I would say, between 4 and 5% in most states in Maryland, can be up to 6% depending on the purchase price of the house. But you want to add that to your down payment. The down payment varies depending on the program. Usually it's going to be 3% for a conventional loan or 3.5% for an FHA loan. There are a couple other options that allow you to do a 0% down. So obviously the easiest way to do the down payment is from your savings or checking account. Now, cash is not an eligible source of down payment. That's very important. I still get this question a lot. You cannot pull money out from under your mattress and use it for a down payment. It has to be sourced. We're very up to date with technology. We do require 2 months worth of bank statements, and we're reviewing for large unsourced deposits into your account. Now, if you're getting paid from work or like a tax return refund or a gift, those are all sourced sources. We can source where it came from. What we can't source is, the money you pulled out from under your mattress and deposited at an ATM. So that's the easiest option if you have it there. If you do have cash at home, you can use it. You just have to put it into your account 2 months before you go to purchase the house. After 2 months, it's no longer going to show up as an unsourced deposit. We can now source it. It's been in your account for 2 months, and you can use it towards your down payment. Second option is you can get a gift. You can get a gift from basically anyone that's related to you, or a close friend as well, as long as we can document the friend for most programs. It is very common to get a gift from a family member. Usually it's a parent or sibling. We do have to source it though. So we do typically have to show it leaving the account of whoever's giving the gift. We typically will document the check, and we'll also show it showing up in your account. And then we have a gift letter that documents the whole process. So before you do that, just make sure that you're talking to your loan officer, making sure that he knows that's part of the plan, so you can document it accordingly. It's easier to do it when they're involved in the process as it's happening, rather than trying to track it down after the fact. Third option, I'm going to go into some of this a little bit more. Is actually the government. We have a lot of local, state, and federal agencies that provide down payment assistance. There's a lot of nice local programs targeted towards specific, like let's say first responders, occupations, first-time home buyers, people below certain income limits. I'll go through my favorite option in just a second, but there's a lot of different sources for that. I'm familiar with a lot of the local programs and state programs. Fourth option is you can actually get, this can't be applied towards the down payment, but it can be applied towards the closing costs. You can get typically anywhere between 3 and 6% in seller concessions towards your closing costs. So it depends on the loan type that you're using, but you can ask the seller to cover a portion of your closing costs. And then the final option is you can actually pull from a retirement account. Typically, we recommend you do this as a loan for tax implications, but you can always talk to your accountant to see whether it's worthwhile or not. I kind of view this as a last resort. You can pull from your retirement, take out a loan, and use it as the down payment. Obviously, it's going to be taken back out of your paycheck, so you will see that in in your income. It will be taken out of your income, but it is very commonplace to do that if you don't have a lot of money saved. Okay. Now, I just wanted to touch briefly on the Maryland Mortgage Program. I utilize this program all the time. I actually have 3 buyers under contract using this program right now, probably more to come in the coming months. It's really, really great utilizing down payment assistance from the state. I'll go through a couple of the programs they offer in a second, but it's nice because it's all of Maryland qualifies for. As long as you're under their income limits, you're gonna be able to qualify, and as long as you're a first-time home buyer. General requirements: 45 to 50% debt to income ratio. For most programs, depends on your credit score. If you're a little higher credit score, you can go up to the 50% debt to income ratio. They have a 640 minimum credit score requirement. It's compatible with all the 4 major loan types, so conventional, FHA, VA, and USDA. You have to be under the household income limits. So this takes everyone in the house into account. It's not just whoever's on the loan. I have 2 of the counties in Maryland just as an example, but there are other counties as well. These are for non-targeted areas. The targeted areas do have a little bit higher income brackets. But you can see Anne Arundel County is going to be in the lower of the 2. It's $124,500. So as long as you made under that, you would be qualified for this program in all the counties. That's the lowest bracket. And then you can see in Prince George's County and a couple other high cost counties, it goes all the way up to $210,980 for the household income. And you can see it does adjust for household size if you have 3 or more people in the house as well. Over on this right-hand side. You do have to be a first-time home buyer in most cases. They do have programs for second-time home buyers. They typically come with a little bit higher interest rates. But you can use the first-time home buyer ones if it does happen to be in a targeted area, which is nice. There are certain counties like Baltimore City. The entire county of Baltimore City is a targeted area. For other counties, there's some that don't have any in a targeted area, and there's others that portions of the county are in targeted areas. You do have to take a home ownership counseling course. You can do that after you go under contract. There's a couple different options you can choose from. Typically, it's a couple-hour online course. And then it is for 30-year fixed mortgages only, so you don't have to worry about the interest rate increasing in the future and your payment going up. You're going to have one fixed principal and interest payment for the 30 years that you're in the mortgage. And then just to cover a couple of the programs that they offer a whole bunch of programs. These are the ones that I see most commonly used. Up in the upper left-hand corner, I think this is probably the least utilized, but probably one of their best programs is the Direct program, the Advantage Direct program. It offers a reduced interest rate for first-time home buyers, and it actually has a reduced mortgage insurance as well for if you're under 80% of the area median income. Typically, I see this be about 0.5% less than the standard interest rates in the market. It's combinable with all 4 of the major loan types. But the caveat is that you can't be taking out any assistance in order to qualify for this. So if you have a lot of money saved, maybe you're able to get some seller concessions. Your goal is to get the mortgage payment as low as humanly possible. This is the best option for you to take advantage of as a first-time home buyer. You go down to the first-time Advantage 6,000, 3%, 4%, and 5% loan options. These are all great options if you are a first-time home buyer and you need a little bit of assistance to get into the house. So they have tiered tiers, and the interest rate does increase a little bit as you take out more assistance, but it really doesn't increase all that much. Most of the time, people are either taking the least, the 3%, or the most, the 5% option. And you can imagine if you're doing a FHA loan with 3.5% down, taking out 5% in assistance, it's covering basically the entirety of the 3.5% down, plus an additional almost 1.5% of your closing costs. Now, this is a 0% interest rate loan, so you do have to repay this when you go to sell the house or refinance the house, if you're not utilizing one of the Maryland Mortgage Program's options for refinancing the property. But yeah, they offer very, very competitive interest rates. They're really in line with what you would see with like a normal conventional loan, but you get to utilize all that assistance as well, so you don't have to, bring a whole bunch of money out of pocket. The Home Start option is my favorite to utilize as long as you qualify for it. It has slightly lower income requirements. So it's 50% of the area median income. It's about 60,000 for the majority of Maryland, and then it's a little bit higher. I think it's like 75,000 for some of the higher cost counties. But it offers 6% in assistance, so more in assistance, and it offers a reduced interest rate compared to the other programs. So you kind of get the best of both worlds. You get a lower mortgage payment and you get more assistance as long as you're under that income bracket. And it's the same terms as before, but I love to utilize that as if you're under the income limits for it. Then probably the most asked about option I get is the Maryland Smart Buy 3.0. I just closed one of these. I have another one that just went under contract today. It offers up to $20,000 in student loan forgiveness, and it's combinable with the assistance from the $6,000 and the Home Start as well. It does have a little bit higher credit score requirements. Remember, all the other ones was a 640 minimum, has a 720 minimum credit score for this program. And one of the big caveats is that all your student loans have to be paid off at closing in order to utilize this loan. So just for instance, the gentleman that went under contract today, he actually has $26,000 in student loans, and he's making up the difference of the $6,000 out of his pocket to ensure that all of the other student loans are paid off. Now, we were able to combine that with the Home Start product and get the 6% in assistance. We also got 3% in seller concessions. So he doesn't need anything additional out of pocket besides the $6,000 that he's bringing to pay off the remainder of his student loans. For those that it makes sense for, it's a no-brainer. This is the best possible solution for your mortgage. Now, these programs are combinable with a lot of the local programs as well. So a lot of times we can stack these if you're interested in utilizing a local program and you meet the requirements for that as well. We can stack one of these programs with that as well. It does sometimes add a little bit of time to the closing. We can usually close the Maryland Mortgage Program loans in under 30 days. Typically, if you're adding another program, you're going to need 15 or another 30 days to add another program, depending on the program's requirements. And that was all the information that I have. I have my contact info here. I do see there are a couple questions in the chat. So I guess I can start to answer some of those.
Kyle, why don't we take a couple of those just rapid fire, because I do want to get to other guests. So which credit scores, very good question from Cheryl here, which credit scores do lenders look at? Because they are different than those free ones that you get from your bank or from, your credit card.
Yeah, so I do get that a lot. That's a very common complaint. If you're looking at like Credit Karma, it's typically not accurate. It's a great tool to see what you're doing is good or bad, but it's typically not accurate to what we're pulling as your mortgage FICO. The way I view it is, it's obviously you're borrowing a lot more money when you're actually going to purchase a house. So we pull from a lot more sources. Typically, your credit score can be up to 20 points lower than what you see on those, unlike Credit Karma or those. And the reason is they're just calculating it a little bit differently. And we take the middle of the three that we pull. So we ignore the top and we ignore the bottom of the three major credit bureaus.
Great. And then Vicky came in with an important question. When you're calculating debt to income ratio, and you're looking at the monthly income, is that gross or net?
So it's going to be your before tax income. We are looking at it before taxes, and we want it to be less than 50% of your total monthly debt obligations, including your proposed mortgage payment when it's all said and done. So before tax.
Great. And then a very interesting question from Gregory, and I don't know that I have heard this one before. So when you're looking at income, can that include capital gains income from stocks that you sell each year?
It can, yes. It does have to be consistent. It does have to be consistent over a couple year period, but yes, you can use capital gains in your qualifying income. Yeah.
Fantastic. And then the last two questions are pretty specific to Maryland Mortgage Program. I'm going to hold those for Frank, who's going to wrap up our presentation here. But Kyle, this was amazing information. Thank you so much for being here. Thank you for sharing this. I learned something about the mortgage, approval process tonight. So thank you. Thank you very much. Our next presenter is James Hall. He is with Freddie Mac. And, we've mentioned credit a lot here tonight. And Freddie Mac has a great product that we think that you will like to take advantage of if you want to learn more about getting your credit score the best that it can be. So, James, thanks for joining us.
Oh, Lisa, thank you for bringing me back. I really appreciate it. And your audience is receiving great information. Angel and Kyle really put it out there tonight, and everybody that's tuned in is getting some valuable information on the home buying process and the mortgage application process. So, like Lisa said, I'm Jim Hall with Freddie Mac. I can assure you Freddie Mac is not a person. We are a mortgage company. We're considered a government-sponsored enterprise. GSE is the acronym used in our industry. We've been around for 53 years. We were created and chartered by Congress in 1970, and we're a mission-based organization, and our mission is to provide affordability, stability, and liquidity to the housing markets. You may be asking yourself, okay, why did Lisa invite, two mortgage companies to speak to you tonight? Freddie Mac does not lend money directly to consumers. So I am not in competition with Kyle, and my company is not in competition with Meridian. Like I said, one of our missions is providing liquidity. So what we do, we are a mortgage company in the secondary market. And what that means is companies like Kyle's, they originate the mortgages and then sell them to companies like Freddie Mac. And then what Freddie Mac does, we provide the liquidity, excuse me, the liquidity in the markets so mortgage companies can continue to lend money to consumers so they can buy houses. And then what we do with these large pools of mortgages is we put them into larger investments on Wall Street and sell them to firms. So it's really exciting what we do. My job as an affordable lending manager is to interface with realtor associations like Maryland Realtors and realtors like Angel and mortgage companies throughout the country like Kyle's, and also housing finance agencies like the Maryland DHCD. You have one of the best, in my opinion, housing finance agencies in the country. Freddie Mac's really proud to partner with them, and we created a mortgage program called the HFA Advantage program, which lenders can only use through housing finance agencies. So Kyle had mentioned the conventional component through the Maryland Mortgage Program, and HFA Advantage is that conventional component. It's a 3% down program, and it has reduced mortgage insurance. So I'm not going to do a deep dive into it because I don't want to step on Frank's toes and give him something to speak about. So, but it's a great program, and we really promote it out there. And like I said, the lenders in Maryland are really using it and really helping home buyers, especially first-time home buyers, because you can couple it with the down payment assistance that the DHCD offers through the Maryland Mortgage Program. So one of our main pillars at Freddie Mac is education. And we look at education with two components. There's industry education. So they have people like myself out there interfacing with realtor association and lenders and raising awareness and educating on our mortgage programs. But we also take consumer education very, very seriously. And I'm going to share my screen now. And Lisa, if you could tell me when it comes up, I would appreciate it. And can you see that?
We've got you.
All right, great. All right. Freddie Mac created a financial literacy tool called Credit Smart. And this has been around for 20 years. And, this is one of the bonuses for you tuning in tonight, because this program is free to you. And it's an educational tool that you'll be able to utilize through your whole home ownership journey. And Lisa and Maryland Realtors are going to share these slides with you. So you'll have the information, and the website address is in the lower right-hand corner of this slide here. So it's very accessible. We enhanced it within the last 2 years to really bring it up to date. It's multilingual, very interactive. And we broke it into two sides, okay? The financial capability side and the home ownership education side. The financial capability side, we consider and call it essentials, and the home ownership education side is Homebuyer U. So in the financial capability side, you'll gain financial knowledge, skills. You'll be able to, actually learn how to budget, save, and really we want you to preserve and protect your asset. It's very, very important, because this is probably the biggest financial decision you're going to make in your lives. And it's really, really important that, you have a trusted advisor like Angel, who's going to, present the most affordable house that meets your needs. And then you're going to have another trusted advisor in the loan originator like Kyle, who's going to get you the most affordable loan program that you qualify for. But they're going to be, teaching you through the process. But Credit Smart is something that, like I said, you can keep through your whole home ownership journey. So you can set up your own goals, track your progress, set up a notebook, and set up your personal dashboard, and really, really, gain knowledge. Knowledge is power. So it's nice to be educated, but being self-educated also is, a fantastic tool also. So the essentials part has multiple modules. And again, like I mentioned, it helps you set your goals and teaches you how to earn and spend and being a savvy borrower and planning to save and prepare and protect. Because it's very important to, really know how to save. I mean, yes, we live day to day, and, we need money for food and gas and certain bills. But I'll never forget, I bought my first house 33 years ago. And my father said, "Jim, you need a rainy day fund." And I'm like, "Well, what is that, Dad? What's a rainy day fund?" And he said, "Well, being a homeowner, things happen. Not you're going to furnish the house, you're going to buy stuff for the yard and things like that. But then, things will happen where you're going to need some money real fast." And I'm like thinking, okay, he just doesn't want me to come to him and ask him for money. But that wasn't the case. He was actually trying to pass some wisdom down to me. And 2 years into my home ownership, my wife and I came home, and our water heater went, and it flooded our basement. And I had a rainy day fund. I listened to Dad, so I could clean up the mess, and I had the money to do it, while I was putting the claim in for the insurance company. But again, if you don't have a dad like mine that has the wisdom and is educating you, Credit Smart will do that and step in and will teach you how to do this stuff. And like I said, prepare and protect. Okay, very, very important. We want you to buy that home. We want you to get, approved for the mortgage, but we want you to stay in that property and protect it for the entire time that you're there, because you're gaining wealth by making those mortgage payments, and you're gaining equity. Okay. So again, Credit Smart will help you understand that and prepare you for that. Now, for the immediate part of it, Homebuyer U. Okay. This is when you're working with Angel and you're working with Kyle. This will help you also become better educated on the process. It's only 6 modules. Okay. So it's not overwhelming. Like Kyle said, you know, most courses take just a couple hours, but you have to pass a test when you take this course and achieve 80% or higher. But by passing that test, okay, you get a certificate that meets national industry standards on homeownership education and counseling. It's good for a year, and you know, you get that certificate, you know, your realtor and your loan officer are going to know you mean business and you want to buy a house, that you're there, you know, to attain that goal of home ownership. Again, it's available in English and Spanish, and another, you know, another great tool. So with that, I'm going to stop sharing. And again, it's free. It doesn't cost you anything. So, you know, for joining us tonight, you walk away at least with Credit Smart. So, you know, please take advantage of it. I know Maryland DHCD accepts it through our HFA Advantage program, and it is just a great tool. And I really, again, commend you for tuning in tonight, from hearing from, you know, these experts that Lisa have put together. And, you know, Frank's going to, like I said, do a deeper dive on the HFA Advantage program.
Jim, thank you so much. And I mean, you can't beat free, right?
Free
So
free
thank
knowledge.
you. And now I'm going to hand it over, last but not least, our man with the Maryland pride behind him tonight, Frank Bamunde with Maryland DHCD. I know that we got an overview from Kyle of some of the Maryland Mortgage Program products, but Frank, what did we miss? What can we not leave here tonight without knowing? Oh, and hopefully we haven't lost Frank.
Hi, Lisa.
Oh, Frank, are you still there?
Yeah, it kicked me out. It
Oh,
didn't like me.
no. Oh, no.
I just did a screen share. So are you able to see my website now? Can you guys see my website?
We see it now. Thank you.
Okay. All right. So do you want to go through those questions first that you received and knock them out?
Yeah, I am more than happy to. We had a question about your targeted areas that Kyle mentioned. And what exactly do those mean in terms of the Maryland Mortgage Program?
So let me go through that. So this, what you're looking at is our website. It is mmp.maryland.gov, with part of the Maryland Department of Housing and Community Development. We have our own dedicated website. It is mmp.maryland.gov. And I'm going to go into the professional portal. It's just the easiest way for me to get to the things that I need to get to, as I do every day. And I'm going to go to program information. And when we get here, we get to something that's called a Maryland Mortgage Mapper. And let me explain what that is for everyone. Targeted areas it's a designation from the federal government to increase the homeownership rate in certain jurisdictions, neighborhoods, streets, addresses. And basically, you plug in an address through a map through the Maryland Department of Planning, which is right here. I'm just going to go into the mapper itself. You can plug in an address, and you can find out if the property that you're looking to purchase is located in a targeted area. And if it is located in a targeted area, then you have specific benefits that the federal law gives you. You can qualify as a first-time home buyer, even if you're currently a homeowner. Or if you've been a homeowner in the last 3 years, you can still qualify as a first-time home buyer. Or if you're already a homeowner, but you like to move into a targeted area, you can qualify as a first-time home buyer as well. You can also qualify at a higher income limit in a targeted area, or you may even qualify at a higher acquisition cost in a targeted area. Besides targeted areas, we also use the mapper to qualify people for priority funding areas. And priority funding areas is related to the next question you have regarding new builds. You can use a new build funding with MMP, but it must be located in a priority funding area. So I believe you have a question regarding a new build with MMP.
We did.
So that means that Kyle will have to come into the mapper and look to see if it's in a target area to qualify as a first-time home buyer, or go into the mapper to see if the property this person's looking to purchase possibly qualifies for MMP funding within a priority funding area. Priority funding area is a designation from the state of Maryland. So targeted federal, priority funding is the state of Maryland. So if I click back one more time, when you come here, we have tabs for everything. The homebuyer education requirements for the Maryland Mortgage Program are listed in here. You don't need to know the contacts with MMP. Just like Jim Hall, we are a finance agency at the state level. Obviously, they're at the federal level, but at the state level, we provide funding for home buyers to be able to access products that are affordable with down payment and closing cost assistance that our lenders will use, such as Kyle with Meridian. And Meridian is one of the top performing lenders with the Maryland Mortgage Program as well. So you don't need to contact anybody in MMP, because we're not going to do your loan, and the loan is going to be done through a participating lender. If we go to our product line, and no, I don't have a lot of time. I just want to reiterate that Kyle did a great job talking about our products in general. I just want to reemphasize that we have two sides to MMP. We have a first-time advantage side, where you must be a first-time home buyer, and the lender will walk you through whether you qualify as a first-time home buyer. But there are 4 ways a borrower can qualify as a first-time home buyer with MMP. A, if they never owned a home before, then they're truly a first-time home buyer. B, if they haven't been on a deed in the last 3 years, they can also qualify as a first-time buyer. C, if you're a veteran using your VA entitlement for the first time, even if you're currently a homeowner in another state with another type of product, you can qualify as a first-time home buyer if you're a veteran. Or D, if you're purchasing in a targeted area. So Kyle will go to the mapper, plug in an address, and see if that property is located in a targeted area. Broadly speaking, in the Eastern Shore, we have most of those counties qualify as targeted areas, such as Kent County, Caroline County, Dorchester County. In Western Maryland, we have like Garrett County, Allegheny County that qualify as targeted areas. Baltimore City is fully targeted as well. And then for other counties, you need to be able to go to the mapper, plug in an address, and it'll tell you whether it's targeted to qualify as a first-time home buyer, or qualify at a higher income limit, or qualify at a higher acquisition cost. Really, there's lots of options within that. And that's nothing that our listeners need to remember more than just to be able to go to our website, mmp.maryland.gov, and get your basic initial information. When you come to the website, if I go back to the beginning, I click back one more time. Again, I'm going to go back all the way to the beginning. When you come here, if you scroll down, you can hit Talk to a Lender, and you'll be referred to a participating lender with the Maryland Mortgage Program. You can talk about preparing yourself. If you click on this, Prepare Yourself as a home buyer, you can go through the journey to homeownership, which you can get a kit that explains everything we do with the Maryland Mortgage Program. You can get information about the Maryland Mortgage Program. You can learn more about eligibility with MMP. And if just talk about that for a second, the basic eligibility for MMP is you must be at least 18 years of age, be able to enter into a contract, have a valid Social Security number. Citizenship in the United States is not required, but you must have a valid Social Security number. And then, of course, over here goes over, what's considered a first-time home buyer, basic household income eligibility. That's something that's unique to the Maryland Mortgage Program, because the lender uses affordability income towards determining how much you can afford. So they may be excluding part-time income or seasonal income or someone else living in the household. But for MMP to determine eligibility for the program, we need to account for household income limits. And I believe Kyle went a little bit into some of the household income limits for a couple of counties. The income limits are actually pretty high. It's up to, for a family of 3 or 4, it's up to $210,000 in the DC area. And in the Baltimore area, it's up to $150,000, something like that. So they vary by location. In targeted areas, you get additional benefits, and so on and so forth. You must be a home for you to live in and occupy. So this cannot be for a product that you can use for an investment property. It must be your own home to live in, and it must be your only home. There's also liquid assets that we take a look at. Make sure that you don't have too much money in assets. There's a threshold, it's a formula the lenders use. You cannot have more than 20% of the purchase price on liquid assets to be eligible for the Maryland Mortgage Program, but the lender will walk you through it. And there may be a different additional conditions regarding eligibility. Really, the lender will walk you through those as you go through it. I would say it's a resource. It's a good place to come and just to get basic information at mnp.maryland.gov. We have a loan calculator. We have pages on down payment assistance, about the process, helpful information about our programs. You can go to our website directly, or you can go through marylandhomeownership.com, which is the website for Maryland Realtors, and there will be a link for the Maryland Mortgage Program as well. So we have lots of resources to be able to help home buyers in this tough market to be able to purchase a home. As an aside, I would like to say that when you use MMP, if you have any leftover money after down payment and closing costs are paid for, you may be able to get some money back. Money that you pay for an appraisal or money that you pay for a home inspection. So you may actually be able to go to close, get your house keys, and get a couple hundred or maybe even $1,000 back that you can use towards furnishing the new home that you just bought. So it is my pleasure to be here with you guys. I know I don't have a lot of time. Made it fast and quick, but hopefully I welcome you to come in and come to the website mnp.maryland.gov or check marylandhomeownership.com for additional information. And I want to thank everyone for your patience and for all the knowledge that you imparted to everyone. You can also get a guide for MMP in Spanish as well. If you need it, you can get it in Spanish and you can get it in English as well. Are there any other questions?
Frank, that was amazing. Thank you so much. And he's right. Maryland Mortgage Program is awesome. These loan products you cannot find in other states. Some are so unique to Maryland and only available for the buyers. I have one final question that came in, and Frank, it might be for you, but if Kyle is still with us, he may have an answer for this one as well. We had a question about refinancing and how, if there are any limitations on the number of times that you can refinance.
Well, as far as the Maryland Mortgage Program, when you refinance out of our mortgage, you got to pay back any down payment assistance that you used, but we don't have any limit. You know, you can buy a house with MMP and refinance in 6 months or 18 months. Now, there may be TRID requirements or mortgage licensing requirements that, yeah, I want to be talking about stuff that I don't know a whole lot about. It's more of a Kyle question that affects compensation. A lender can get paid if you refinance too quick. But Maryland Mortgage Program does not have any overlays regarding refinancing. Just that the money needs to be paid back. Anything that was borrowed to be able to purchase a home needs to be paid back if they refinance.
Great. Kyle, anything to add to that?
Yeah, I agree with what Frank said. Typically, like at least 6 months, and you know you're safe. Also, you want the interest rate to have gone down, you know, a certain amount for it to make sense, because there are some costs associated with the refinance. So there are some programs where you don't have any limitations, but worst case scenario, I think it's 6 mortgage payments is what you're required to make.
Great. Well, thank you all. Thank you for being here tonight. You all had excellent questions. That was wonderful. So we didn't mind going a little bit over so that we could answer your specific questions here tonight. I want to thank all of you for being here. I want to thank our presenters. Come check us out on marylandhomeownership.com. We will be sending out tonight's presentation to you, so look for that. Stay safe out there. Have a wonderful evening and best of luck on your homeownership journey. Thanks, everybody.
Thank you.
Bye, everyone.
Thank you. Take